Buying a home is a huge step. It's exciting, but it can also feel overwhelming. One of the smartest moves you can make is getting pre-approved for a mortgage. This means a lender has reviewed your finances and is willing to loan you a specific amount for a home purchase. Think of it as a golden ticket that shows sellers you're serious and ready to move quickly. Getting pre-approved puts you in a strong position. It shows sellers you're a qualified buyer, which can give you an edge in a competitive market. Plus, it helps you set a realistic budget and avoid disappointment later on. Remember, pre-approval isn't a guarantee of final loan approval, but it's a powerful tool that can make your home buying journey smoother and more successful. So, what does it take to get pre-approved? First, you'll need to gather some important documents. These typically include proof of income, like pay stubs or tax returns. You'll also need to provide documentation of your assets, such as bank statements and investment account summaries. Lenders want to see that you're financially responsible and capable of repaying the loan. They'll carefully review your credit history, income, and debts. Be prepared to answer questions about your employment history, monthly expenses, and any outstanding loans or credit card balances. It's important to be honest and transparent throughout the process. Providing accurate information up front will save you time and potential headaches down the road. Getting pre-approved offers numerous benefits. One major advantage is that it gives you a clear picture of what you can afford. This helps you narrow down your home search and focus on properties within your budget. No more falling in love with homes that are financially out of reach. Being pre-approved also strengthens your negotiating power. In a competitive market, sellers are more likely to accept offers from pre-approved buyers. It shows you're serious and ready to close the deal quickly. Finally, pre-approval can save you time and stress during the home buying process. By getting your finances in order upfront, you'll streamline the mortgage application and underwriting process. To get pre-approved, lenders will typically require certain documents to verify your financial situation. Be prepared to provide recent pay stubs, W-2 forms, or tax returns to demonstrate your income. Lenders will also want to see bank statements and investment account summaries to assess your assets. Credit history is crucial, so expect to authorize a credit check. Be prepared to explain any negative items on your report. Additionally, you may need to provide documentation of any outstanding debts, such as car loans or student loans, to determine your debt-to-income ratio. Gather these documents in advance to make the pre-approval process smoother and faster. All right. Let's dive into navigating the pre-approval process in 2024. Getting pre-approved for a mortgage involves several key steps. First, you'll want to shop around and compare rates and terms from multiple lenders. You can contact banks, credit unions, and even online mortgage lenders to get started. Once you've chosen a lender, you'll complete a mortgage pre-approval application. Be prepared to provide detailed information about your income, assets, debts, and credit history. The lender will review your application and supporting documents to assess your creditworthiness. They'll consider factors such as your credit score, debt-to-income ratio, and employment history. If you're pre-approved, the lender will issue a pre-approval letter specifying the loan amount you qualify for. This letter is typically valid for a set period such as 60 or 90 days. Remember, the pre-approval process can vary slightly depending on the lender and your individual circumstances. So be sure to communicate openly with your lender and ask any questions you may have along the way. Section 6. Common pitfalls and how to avoid them. While getting pre-approved for a mortgage is generally a straightforward process, there are a few common pitfalls to avoid. One mistake is applying for new credit cards or loans while you're in the pre-approval process. This can negatively impact your credit score and potentially jeopardize your pre-approval. Another pitfall is making significant purchases, such as a new car or expensive furniture, before closing on your home. These large purchases can affect your debt-to-income ratio and make it more difficult to obtain final loan approval. It's also crucial to avoid changing jobs or experiencing a significant decrease in income during the mortgage process, as this can raise red flags for lenders. By being mindful of these potential pitfalls, you can increase your chances of a smooth and successful mortgage pre-approval. Section 7. Recent changes and their impact. The mortgage landscape is constantly evolving, and recent changes have impacted the pre-approval process. For example, in response to the economic uncertainty caused by the COVID-19 pandemic, some lenders have tightened their lending standards. They may require higher credit scores or larger down payments than in previous years. Additionally, rising interest rates can affect the amount you're pre-approved for. As interest rates increase, the costs of borrowing money goes up, which can impact affordability. In August 2024, the average 30-year fixed-rate mortgage reached 7.23%, the highest it has been in over 2 decades. It's crucial to stay informed about current market conditions and consult with a knowledgeable mortgage professional to navigate these changes effectively. Section 8. The bottom line. Pre-approval is key. In the world of home buying, getting pre-approved for a mortgage is like having a VIP pass. It shows sellers you're serious, helps you set a realistic budget, and can give you a competitive edge. Remember, pre-approval isn't a final loan approval, but it's a vital step in the right direction. By understanding the process, preparing your finances, and working with a trusted lender, you can navigate the mortgage pre-approval process with confidence. Don't underestimate the power of being pre-approved. It can make all the difference in your home buying journey. Section 9. Your next steps. Take action. Now that you understand the significance of mortgage pre-approval, it's time to take action. Start by gathering your financial documents, including proof of income, assets, and debts. Next, shop around and compare rates and terms from multiple lenders to find the best fit for your needs. Don't be afraid to ask questions and seek clarification on any aspect of the pre-approval process. Once you've chosen a lender, complete the pre-approval application accurately and thoroughly. By taking these proactive steps, you'll be well on your way to securing your dream home.